Hello and welcome to Smart Business Manager video series. In this very video, I'm going to show you how to create, update, delete and manage various accounts. That's when I say accounts, I mean your customers, your suppliers, your branch accounts and your payment accounts. So quickly, let's go through it. To get to your accounts, you need to click there's a button here under the menu called accounts. So once you open this account, you can see all the accounts that we manage in this system. Now you have the customers account, suppliers account, payments account, branch account. So what's the essence of this account? This account is just like a way of, just imagine that you have your bank account, right? So it's just an account, and that is what, like a portfolio that you need to manage, because a lot of transactions goes in and out of that account. So that's how we'll put all of them together, even though they're a little bit distinct, but they have some shared characteristics. For instance, you have your customers, you have your suppliers, right? Customers are the people that buy stock from you. Suppliers are people that supply you stocks that you sell to your customers, right? So once you create an account for them, because oftentimes you want to see what is going in and out of what they are doing, and you want to see some of them that you might be offering credits, or people that will be offering you credits. You want to see how the account is moving. So the same thing with your payment account too. So payment account is just simply your bank account, your cash account, your POS account. So you want to track it very well. So, and that is the essence of this particular video. Now let's go straight into our customers account. To go to customers account, you just click this customers, right? So let's say I want to create a new customer, and the customer's name is Gerard. Let's say I create, okay, no, let me use Sean as my customer. Now Sean A, right? Now this is how I want to remember my customer, right? So you can put in press your tab button to add the phone number if you wish, but it's usually very good to be able to get this opportunity for you to get your customers a contact, in case to be able to reach out to them to buy more from you. So you can put their addresses, you can put their emails, right? Then you can put the opening balance. So what is the opening balance? Opening balance here is simply how much that your customer is owing you as at the time you are creating the account. So if I'm creating the account today and this customer is owing me 5,000 naira, so I simply just put 5,000 naira, so that the system remembers that whatever is going to do with Sean as at today, is going to remember that Sean already has a balance of 5,000 naira, right? So we'll move to the next one, which is credit allowances. What is credit allowances? This simply means the number of days you allow this Sean to owe you for. Now if we've come to an agreement and I supply Sean stocks, and we have come to an agreement that I'm going to give him credit, right? If I'm not giving him credit, we don't have any agreement of such. You can just leave it at 0, right? You can always change it as the transaction goes by. But if, for instance, we had an agreement that whatever I supply Sean, he should pay me in 1 week, that's 7 days. So I'll simply put 7 days. So you could have an agreement with your customer to pay in like 1 month, 2 months, whatever it is, but make sure it's not too much so that it doesn't kill your business. So let's assume I give Sean 1 week to pay me whenever I supply him. So all I need to do is just to click enter button, and I've saved Sean. I could go on and on to create more customers, right? So that's simply customers. The other one that looks exactly like it but in an opposite way is what we call your supplier. So this is, we've talked about your customers that are buying stock from you, right? So suppliers are persons or companies you buy your own stock from, that you need to stock in your business and now sell to your customers. So the same way you register the customers, the same way you're going to register your supplier, so that you're able to manage everything that your supplier is giving you through your system. And for instance, I could create a supplier, for instance, and call the customer, for instance, I call it Emzo, right? If I create a supplier, I say Emzo Farmer, right? That's a company that supplies me all forms of products in terms of drugs. So I could put the phone number, I could put the address, I could put the email, right? Then the same thing happens for opening balance. I just check, okay, as of today that I'm creating this account, am I owing Emzo Farmer any money? If I'm owing Emzo Farmer any money, let's say for instance I'm owing Emzo Farmer as of today 50,000, so I simply just put 50,000 as the money I'm owing. So if Emzo Farmer also gives me a credit allowance. So let's say it allows me to pay in 2 weeks, so I just simply put 14 days. So that's simple what this is all about. Now note that for this customer and suppliers, is actually implicated in sales and purchase. Now if you want to make sales, you deal with your customers, right? So this is where you find the customers you have dealt with. Let's say then I created a customer called Sean, and you can see Sean, right? If I put it there, Sean is owing me 5,000. This 5,000 means Sean is owing me, and whenever I'm doing any transaction with Sean, you can see what it entails. So that as at today, the 10th of October, I gave Sean 7 days to pay me. So if I do a transaction under Sean now, Sean will pay me probably be on or before 17th of October 2022, right? So let's assume I sell a product to Sean now using this sales platform. Of course, to learn this sales platform, you visit our other videos. There's a specific video on how to make sales, right? So you don't need to worry about that. So let's assume Sean is buying 24k perfume from my hand, and I'm selling just one piece of this product to him at the price of 4,600, right? And I've selected Sean. Sean is already owing me 5,000. Imagine that Sean decides to pay me 2,000 out of this, right? And what was the balance as at today? 2,600. If I save this transaction under Sean's account, this balance of 2,600 will go and enter into Sean's account. So at the end of this transaction, Sean will now be owing me 7,600, right? It's even possible that Sean can decide out of these forces, Sean wants to pay me both for today and pay me the previous balance. So you can see amount net total is 4,600, and Sean can decide to pay me 9,600, right? What does this mean? It means that balance is now minus, right? Which is a factor of this. So once I save this account, right? Once I save this transaction, what will happen? The simple thing that will happen is that Sean will no longer be owing me, and let's check how that goes. So let me select Sean here. You can see Sean account is on 0 because he was owing me 5,000 before. He bought something and he overpaid, right? So that's the essence of this customer account. The same thing also applies to purchases. So if I'm purchasing, I explained to you how to create the supplier's account. But note, before I go to this supplier's account, on this sales account, I could have a situation whereby I'm selling already and I just want to create a new customer. Let's say this customer does not exist on my list. There's a plus button here. Once I click this plus button, it takes me back to this form. I'm sure you recognize this form where I'm able to create a new customer, and once I create it, it selects that particular customer automatically. Now let's assume I want to now make a purchase. Let's say, what I mean by purchase is that I've bought products from a particular company, so but I'm going to register it into my system as a purchase. So I'm going to use a purchase platform. Now once I click this purchase platform, what is going to happen? I could select my supplier, and this time around I want to select Emzo. I created one Emzo. This is the particular Emzo I created, Emzo Pharma. And remember when I created it, I said Emzo is owing me 50,000, right? So you can see I'm owing Emzo 50,000, right? So I could now buy this same 24k perfume. The cost price is 2,300. So I could decide to buy 5 from this Emzo, and the same thing goes on. So let's assume by default it shows that I'm not paying this particular invoice during purchase, unlike sales whereby you are supposed to pay for what you are buying immediately. The customer is supposed to pay immediately, so if you're not paying, you just zero it. But now by default payment is 0 because we understand how purchase goes. So let's assume Emzo is not paying me any money. I'm not paying Emzo any money at this particular moment. I'm still buying something of 11,500. So once I save this transaction, what happens? It's very simple. This 11,500 goes back to Emzo's account. So if I click this Emzo, remember it's Emzo Pharma, I just click and see Emzo Pharma is now account is now reading 61,500. So that is the beauty of this. But before I proceed on if I'm going to pay up this to pay the payment of this Emzo Pharma, right? I'm going to explain to you quickly the other part of the account. We've talked about customers, we've talked about suppliers. Now look at the next account, payment account. Very simple and very easy. What is payment account? Now, payment account is just simply account where you receive and make payments. Very simple. So for instance, in your business, you use cash, you receive payments as cash, you receive payments through bank transfers, you receive payment through POS, you could receive payment through check or whatever, right? So based on that, we now have 4 types of payment account: bank, cash, check, and POS. Now I could decide to create different accounts that I use. So I could create, the first one I create is cash account. Now you can see my cash account, I've created it. So I could create more cash accounts, maybe the ones I want to use for my savings or whatever. I could create different forms of account. Now what happens then is you are going to still manage it the way you manage your customers. Now money goes into this account and goes out, so you ensure that you manage what goes in. So for instance, I'm just going to quickly create a bank account. Let's say I want to create a Fidelity Bank account, and I just call it Fidelity Bank, right? I could put the account number there. I could just decide to leave it, right? I put the type, I select bank, right? So I could put the account number, then opening balance. So what is this opening balance? The same thing that happens to the customers or the suppliers. So the very moment I'm opening this account, I want to check my phone to see how much is the amount balance on my account, the account balance of this Fidelity Bank. Let's assume this account balance is reading 30,500. 30,500. Now if I save this account, now you can see Fidelity Bank account here, right? Now if I save this Fidelity Bank account, already I have my cash account, I have other accounts, so you can have numerous accounts. What is the implication of this account? Now remember, we did a sales then, and we considered customers or and other things there. Now imagine I still want to sell this 24k perfume now and 46. Now by default, the first account on my account payment account sheet will appear here. That is where the money goes in, and that's why it's best you make sure that the first account is your cash account. So assuming I save this transaction here, what is simply going to happen? It means this 4,600 is being paid for and it entered into my cash account. Now I could decide that I want this money to enter into my new account, which is my Fidelity Bank account. I'm not saying I'm deciding, I'm actually saying that this is how the customer paid. So somebody bought 24k perfume and did a bank transfer to my account, to my Fidelity Bank. So I simply just receive it into my Fidelity Bank account. Remember, my Fidelity Bank account was reading 30,500, right? So I'm going to add 4,600 naira invoice to it. So once I save this transaction, what is simply going to happen? It means that my Fidelity Bank account will now read what I call 4,600 plus the amount there before. So if I check my Fidelity Bank account now, the balance is reading, you can see it, 35,100. It was 30,500 plus 4,600, that's 31,500. Now on the opposite side too of purchases, let's say I decide to buy stock again from any of my supplier and I'm paying cash. Let's say I decide to still buy this same stock, right? And I'm buying 3 pieces of it. The cost price is 2,300, so the total price is 6,900. Now by default, I told you that the amount paid will be 0, right? So but I want to actually pay for this stock as I'm buying it. So where am I paying it from? So I want to select this same Fidelity Bank, right? I have money in my Fidelity Bank, so I want to pay this 6,900. So I simply put 6,900, right? So the balance of this invoice is 0, and it's not going to enter this account because it's been paid, right? It's been paid for, so it's not going to affect this your supplier's account. So all it's going to affect the payment account. So imagine I save this transaction now, that is 6,900. I could print the receipt if I like. If I like, I don't print it. So if I go to my payment account now, see my Fidelity Bank account, so 35,100 minus 6,900, this is what it gives me, 28,200. How beautiful can this be? Now it doesn't end there. Now you could have a situation whereby where we have what we call make payment and receive payment. Now make payment is just for you to make payment to your suppliers, while receive payment is an avenue for you to receive money from your customers that are owing you, that you have granted credit to. Now let's say the first instance, if I click this receive payment and I want to receive payment. Now my customer Seun is ready to pay me today, right? Okay, remember Seun account is now 0. Okay, so let me look for another account that is owing me. Francis is on 0. I want to look for account that is owing me. Okay, beautiful. Tony is owing me 5,500 and Tony wants to pay me, right? Wants to pay me 5,500 today, right? Now my new balance automatically shows 0 once Tony pays this amount, right? But where is he paying the money into? He wants to pay this same money into my Fidelity Bank account. So he did a transfer to my Fidelity Bank account. I could just simply write the description as transfer or whatever I want to write it as. Let's say I could write it as transfer like this, right? And save this transaction. Once I save this transaction, it's going to print a receipt for me. This is a cash receipt for me, showing that I've received 5,500 from Tony and the money was paid into my bank account. I could print this receipt for this customer to go home with. On the other flip side of it is what we call make payment. Now for Emzor and other suppliers that I'm owing, if at any point in time I want to pay them, right? So remember, so the essence of this account is that things are being moved in and out, both your customers, suppliers, your suppliers and your banks and your cash. Remember, we're just working with one particular account, so you could have several other accounts working at the same time. So let's say I want to make payments to Emzor. Now remember, Emzor, I'm owing Emzor a huge sum of money, right? So let's say I just type Emzor here and I want to pay Emzor. Now Emzor is showing that I'm owing Emzor 61,500, and let's say I want to pay 20,000 out of it, right? I have just 20,000 to pay and I'm paying it from what account? I'm paying it from my Fidelity Bank account. And now see, the new balance of what I'm owing Emzor will now be 41,500. So if you remove 20,000 from 61,500, you have 41,500. So you could just describe how you pay this money, let's say by transfer or whatever. And once you click this button to save, it said okay, you have done this successfully and you have a payment voucher, right? That you can actually print and attach it to the receipt. You can sign it and everybody to be sure that you have paid this supplier, and this money goes off from your account and goes into this customer's account. Now it doesn't stop there. You can still have a situation whereby, I'm talking about this account management now, you can have a situation whereby you made a sales or several sales of the day, let's say in cash, and you now wish to pay them into the bank, right? Or you withdraw money from the bank, you want to pay it into your cash, or you have your POS account, right? And your POS, the following day, for some persons, the POS have moved from that your POS account to your cash. All you need to do is just go to transfer payment under billing. You go to transfer payment and you want to do what? You want to transfer money. Let's say I want to transfer, let's say for instance, this my GTB has let's say my Fidelity Bank has 13,700, so I want to transfer it to my GTB. Yes, I want to do a transfer. So it's just very simple. And how much do I want to transfer? I want to transfer 5,000 now. It's just simple. So you can see immediately I type 5,000, it has reduced. So my new balance here will now be 87. Why? To credit this my GTB, which will now remain 23,200. Once I save this account, you can also print a receipt to show that you have done that. But it doesn't stop at that. The essence of all this whole thing is that you've managed the account well, right? But what is the result? What is the report? Just like someone that have gone to university and have studied, so you want to see, okay, what is the report of what you have done? Let's see what you have actually done, and that's what we'll talk about, the report. And when we talk about this report, we'll talk about your account report. So when you go to report, you go to account report, you'll be able to see all the things that have been going on in this your bank and in this your accounts. Remember that we still have other accounts like the branch and the users, but you don't need to worry about that because I have another video that will talk about the branch and the users, right? It still almost looks at the same thing, only that your users is actually your staffs that are using it. Now imagine that I have I want to check my account, right? Report. So I could check what has been going on in my cash, in my bank, in my check and POS. I could check what my suppliers have been doing. For instance, let me take, for instance, I want to check my customers account, right? I will just come here and I want to check Seun. this is shown, right? I double click it and the system brings up what I call the customers report specifically for Sean. Now you can see what went on here. Sean had an opening balance of 5,000. He bought something of 4,600, but he paid 96, right? So automatically the balance is 0. So that is it. So this could give you the detailed report of day-to-day activities on this particular customer called Sean. So the same thing happens for a report for let's say the suppliers like Emzor. My Emzor right here, I could search for my Emzor, this Emzor farmer. You can see what has gone on with my Emzor account. Now the first thing, I had an opening balance of 50,000. I bought something from Emzor 11.5. The balance was 61.5. You can see how beautiful this report is. So I paid 20,000. Remember, I paid 20,000 to Emzor. So you see the balance 41,005. So the total balance is it. Total purchase I've purchased from Emzor is 11.5. Total payment is 20,000. So you can see how beautiful this is. So the same way you can check reports for your cash, how your cash has been going and how everything has been going on. For instance, I could look at my bank. Now I want to check that my bank, I think I have a Fidelity Bank account, so you can check for the particular bank you want to check. This Fidelity Bank account, right? Now you can see what happened to my Fidelity Bank. I had 30,500 opening balance. I paid, I received payment for 4.6. It went up. I made a purchase of 6.9. It came down. I received money 5.5. You can see what has happened to my Fidelity Bank account, right? And see the balance here. So this is total balance of all the things that have been happening in my account. So this actually makes a whole lot of sense. It actually makes a problem. And the epitome of it now finally is that everything that has been happening can be seen in what you call your cash flow analysis. I mean, for your payment accounts, whereby you now report every account that you have individually. So this is my Fidelity Bank, this is my GTB Bank. This within this period from so time to so time, this was the money that came in, this was the money that went out, and this is the balance. So this is how you have to see it. And I hope this video has been very helpful, and I'll see you in the next video. Thank you.